How are we doing, everybody? It is Wednesday at 1:27 p.m., August 24th, 2022. The price of Bitcoin is $21,750. We're up not quite a full percent, about 0.85% in the last 24 hours. But honestly, let's not get too excited because this is more or less a sideways move. Not that anybody's getting excited for a less than 1% move. Look at the last 7 days, we're down. The last month, we're up and down. The last 3 months, we're down. And the last year, almost all down. Okay, so price action, nothing to get excited about. Hasn't been anything to get real excited about for a while. Everybody thinks that Bitcoin and crypto are a get-rich-quick scheme. They're not. They're not. Now, finally, sharing my screen. That's the last year, folks. It's not great, but don't lose faith because good things are coming. Let's talk about why. Crypto Rover, this is a guy who just talks about how, it's a bull run, huge explosive bull run, and who's even worse than that? This guy, T-analyst Aurelian Ohayon, who I've cited on this stream before, but I don't trust this person. Why? Because they are a perma-bull, even in the near term. They're always saying it's a bull run, even when for most of the last year, as we just saw, it is not a bull run. It is a bear market. Macroeconomic conditions are not pretty. The Crypto Dog says, "Dear noobs, BTC is not naturally going down. It is being pushed down via whales placing spoofy sell orders on exchanges to make noobs and risk managers sell to buy back lower. They are stealing your bags and will make you buy back at a higher price." I don't know that that's true. I haven't run any kind of analysis on the order books on exchanges, but this happens. Whales play the market. They tamper with the market. They manipulate the market. That's a real thing that absolutely happens. You, as a pleb, as a stacker, all you have is really one option. Keep stacking Bitcoin. As McShane says, if you sell your Bitcoin, you will have less Bitcoin. We're going to do a McShane trifecta, actually. Got a few tweets from him. In our lifetime, 0.02 Bitcoin equals living well. 0.2 Bitcoin equals rich. 2 Bitcoin equals wealthy. 20 Bitcoin, that's generational wealth. 200 Bitcoin, that is dynasty money. You should be aspiring to climb that ladder as much as humanly possible. And this is really the only chart that you will need. It is the dollar going down in value and Bitcoin going up in value. It is everything over 21 million. Man, it's funny. I struggle to call myself a maximalist, but I overwhelmingly agree with this crowd. They've got it directionally correct way more than other people. Everything else just kind of feels like a distraction. In the long term, this is the way. Breaking, speaking of the long term and macroeconomic conditions, China is planning a $30 billion fund to bail out bankrupt property developers. This should temporarily end global financial fears and Bitcoin will rise. Now, this is from the Martini Guy YT. I don't follow Martini Guy. I don't know if his analysis here that Bitcoin will go up because of this news is accurate. Like we just said, there's really only one graph that you need to know, and that it is over time going to trend up. I don't know if it's going to go up in the near term. But this China business, this is interesting to me. $30 billion. The size of this China catastrophe is such that I don't think $30 billion moves much of anything. What am I talking about? Well, if you want the update, Coin Bureau has done 2 videos on this, one 9 days ago, one yesterday. Andre Jick has done one about 8 days ago. Graham Stephan has done 2 videos on this topic. And Max Maher has now done a video on this topic. Everybody is covering the imminent collapse of the Chinese economy. What it really is 2008. It's over-leveraged real estate collapsing because they got way ahead of their toes on this one. People were heavily over-leveraged. The banks or the developers were basically running a Ponzi scheme where they were paying for new developments with the deposits made on prior developments before they'd even delivered the developers, the real estate development to the people that had been paying for them sometimes years on end, and now people have stopped paying. That's the TLDR. A lot going on here. It is ugly. It will impact the United States. It will impact the world because China is a huge economy, and this looks like it's going to dramatically impact their near-term prospects for economic growth. Real estate represents 1/3 of their multi-trillion-dollar economy, and it's gonna tank. It's gonna crash. It's gonna be bad. That's at least what everybody is saying. And it kind of looks like there's no way to avoid it. This person is saying, oh, they're going to bail it out with $30 billion. my guy. We have seen many governments print trillions of dollars in the last couple of years. It didn't bail us out of very much, right? It caused more problems. It kicked the can down the road, which is really what politicians, it's the only thing they're capable of doing. It's the only thing they know how to do. Kick the problem down the road. Speaking of politicians kicking the can down the road, Biden's decision on student loan forgiveness could come as soon as Wednesday. So it is being said that Joe Biden will issue student loan forgiveness for those who have loans under $10,000, I believe, or up to $10,000. And, student loans have already been postponed since the beginning of the pandemic. It was like, you don't have to pay your student loans anymore. We're going to postpone those payments. And he's probably going to continue to do it again. To my understanding, he's going to push it out even further. The president is under intense pressure to cancel more than $10,000 per borrower. Well, if you have student loans, you might think, great, that's wonderful. Just like you might have thought with the, the stimulus checks that we got in the mail? A couple $1,000. Free. That's great. It's not great, and it's not free. Everything they do is a way of trying to manipulate you, trying to extract value out of you without you even knowing about it. Back in the day, according to Jeff Miller, it cost just a few dollars to buy someone's vote. Now it costs $10,000 in debt forgiveness. Inflation is getting out of hand. If you don't follow Jeff Miller, I do quite like him. He's a psychology professor. He's really into evolutionary psychology and the dynamics of mating and evolution. Fascinating stuff. Definitely applicable to a normal human life. Like genuinely, immediately applicable to how we all behave and how you understand the world. From Heidi, blockchain chick. Student debt forgiveness means money printer go brr. She is right. How do they create this? Well, the government can only get money in three ways. They can tax, they can borrow, and they can print. All three of those are extracting value out of you, often without your, always without really your consent or even your knowledge in many cases. Bitcoin is going to absolutely crush it in the long run. Governments are hell-bent on printing as much fiat as possible. I don't think they're hell-bent on printing money. It's not like they're a drug addict who is drawn to the drug because they get a high from this. I think it's the only tool in their quiver. They have created a system, and it has developed to a point where this is all they can do. Not that they necessarily want to, it's just that's the only tool they have. That's it. What are we going to do? I don't know. Print more money, I guess. What else can we do? Regulate harder. Govern harder. Doesn't work. So they're going to keep printing money whether they want to or not. They are systemically required to at this point. If they stop, the whole thing comes crumbling down. Stephen Livera, consider the precedent being set with student loan forgiveness. Everyone else will also want their share of free stuff. It's a bad trend here, and the world must reestablish market discipline with free market money. This is absolutely true. This is the trend when the government gets involved and tries to, help. What are the scariest words in the English language, according to, I think, Ronald Reagan? Hi, I'm from the government, and I'm here to help. Every time they get involved. This is market manipulation. Even if you don't want to call it that, I think everybody has to recognize that that's what it is. There's a failed market here. Why did it fail? Well, because you had government guarantees. It's the government issuing the loans, remember. So they're going to forgive the loans. That's further manipulation. Markets are dynamic. Actual free markets are dynamic. They adjust. They find a homeostasis, a balance, a way for things to work and to continue to work. This kind of central planning, this just pushes the can down the road. This just creates more problems. Let's see how far we can take it before the whole thing comes crashing down, which it eventually will. From the great Thomas Sowell, if you're not familiar with Sowell, he was an economist and academic, and one of the few academics who was openly derisive of academia. He mocked academia and politicians ad nauseum, did it constantly. And I think it made him a pariah amongst his peers. But the guy was speaking the truth the whole time. Is he still alive? I think he may be. I think he still is. Quite old at this point, but man, a sage with much wisdom. One of his pieces of wisdom, quote, "We seem to be moving steadily in the direction of a society where no one is responsible for what he himself did, but we are all responsible for what somebody else did, either in the present or in the past." As I said, the government only gets money 3 different ways. They can tax it, they can borrow it, they can print it. If they tax it, you're losing money now. If they borrow it, you're losing money in the future. If they print it, your purchasing power is going down now and in the future. Also, as Sowell points out here, all responsible for what somebody else did, either in the present or in the past. There are a lot of, shall we say, modern equality ideologies that will make you guilty and you responsible for what people in the past did. You may not have done anything, but you are still, according to these ideologies, absolutely guilty and responsible, and you have to bear that burden. This is a complete inversion of how the world should actually work. It's a complete inversion of how things are actually sustainable, but it ain't how politics works. From Jason A. Williams, everybody who has paid a student loan or has a student loan presently should get the $10,000, then go buy Bitcoin with that $10,000. Honestly, I think that's pretty good advice. If you had done that with your stimulus checks, you would be in a much better position today. And you'll continue to be in a much better position, right? The price has gone up, the price has gone down. Doesn't really matter in the near term. Over time, that's going to become more valuable, while your dollars will be less and less valuable. Jeff Booth, reminder, system problems with the type of magnitude the world is dealing with cannot be fixed by the system creating the problem. A different way of thinking is required. Jeff Booth, if you're not familiar, is the author of The Price of Tomorrow, a book about the problems with inflationary money and what the world would look like if we had deflationary money as our default unit of account. It's a fascinating book. I do really recommend it. I read it not that long ago. Very much enjoyed it. Jeff Booth is thoroughly converted to the Bitcoin ideas, Bitcoin as a tool for future growth and prosperity, the only real deflationary currency that we know of. A kind reminder to pour one out for our dental school homies. Yes, they do end up making a ton of money down the road, but maybe they wouldn't need to if they weren't on average $300,000 in debt. So on the student loan forgiveness, let's take a look at what people are owing, what their average debt is. Bachelor's degree debt, about $29,000 on average. Graduate school loan debt, about $71,000. Geez, those are not insignificant sums. Parent Plus loan debt, don't even know what that is, about $28,000. Let's just skip on down. MBA, about $66,000. Medical school, $201,000. Dental school, $292,000 by the time they get out of school. Yikes. Now, medical school and dental school are both listed there, both with over $200,000, between $200,000 and $300,000. Interestingly enough, if you look at what are the jobs with the highest suicide rates, what are they? Medical doctors and dentists. Ugh. Not careers I ever seriously considered, and this is no judgment of people who go into those fields, but I do not see the appeal. It's not a world I want to live in. That's not a path I want to take. I think people go down that road because they want stability, but friends, stability comes with a great price, literally and figuratively, literally in the form of huge student debt, figuratively in the form of, well, unhappy lives, apparently. From Dylan LeClaire, seriously, don't worry. All of the issues you're facing today can be solved. You just have to vote harder next election. It's simple. #democracy. If you're not picking up the sarcasm, he's laying it on pretty thick. Dylan LeClaire is a brilliant mind who analyzes the market and has a great analysis in place. And as Jeff Booth pointed out, the system that created these problems is not a system that can solve these problems. They can only kick the can down the road. Also from Dylan LeClaire, coming back at people who are saying, hey man, when was the last time you posted something even remotely positive? He said, do you want honest and objective commentary or do you want hopium? Dylan says, I legitimately believe Bitcoin will serve as global money in my lifetime with a valuation orders of magnitude higher than today. With that said, Should I completely ignore the current macroeconomic headwinds and relentlessly cite the long-term bull case for Bitcoin? My answer to that is no, you should not. You shouldn't do that. That's what these guys over here do. Where is he? This guy. T analyst. This guy is always saying we're in a bull run. That hasn't been true for the better part of a year. Perpetual hopium, perpetual bullishness is not really constructive, right? You should be bullish on the fundamental case and the long-term value, but saying that it's going to go up tomorrow, being excited every day that, oh, I'm going to get rich tomorrow, that's not constructive. It's demonstrably untrue, by the way, as well. I've already mentioned Jeff Booth and the price of tomorrow and deflationary currency and what the world would look like if we actually used and had deflationary currency as our unit of account. One thing that might change is that our relentless consumerism might let up a little bit. And you can see this with Bitcoiners. When they realize that their savings will actually increase in value, that they can put away something and it will increase in value so that their purchasing power goes up tomorrow, next week, next month, next year, people save more, right? I don't know if you remember this. Maybe you're not old enough, but I certainly do. When I was in college in 2008, there was an economic collapse that happened around the real estate market. You remember 2008? One of the strangest things that I remember is people saying, if you have money, like authorities, like the president and the central government, the federal government were saying, if you have money, definitely go out and spend it. Now, they were trying to stimulate the economy, but this was the opposite of what I had always been taught growing up. Save for a rainy day. Somewhere along the line, saving for a rainy day kind of stopped making sense. If your money is always melting, then why put it away? Why save? It's going to be worth less tomorrow. The sage wisdom of savings doesn't really make sense with inflationary currency. The more inflationary, the less it makes sense. Now, if you have a deflationary currency, what do? You save more, you consume less. Bitcoiners, many of them, especially the maximalist crowd, are quintessential minimalists. Not because they don't want things, but because they realize that the tomorrow value of their savings will be a great deal more. It's a much healthier way to live because we're kind of choking on our own consumerism lately. From Jeff Rose at Vailshire Capital, Bitcoin, the world's apolitical, decentralized, and secure money, is the antithesis of a risk asset. Meaning, when you are in volatile, risky times, people tend to get out of Bitcoin. He's saying, no. When things are risky, you should get into Bitcoin. Because over a long enough period of time, Bitcoin's the thing that you can rely on. He does give the caveat. That said, it will remain in price discovery mode, so price moving up and down, discovering where the true value lands according to the market, with substantial volatility until its store of value potential is mostly achieved. This is the thing that always gets me about people criticizing Bitcoin as money. They say, well, it can't be money. It's not a store of value. It's extremely volatile. To which I say, okay, yeah, it's extremely volatile because it's still finding its market. People are still learning about it, still realizing what its qualities are, why it works, why it has value, how it's independent from our existing system. Until that is fully achieved, until it's reached saturation, stability will happen when it reaches saturation. That, by the way, will also be when the opportunity in putting money into Bitcoin as an investment will be completely gone, right? There's an inverse correlation here with Bitcoin as an investment and Bitcoin as a store of value or a stable currency. When it becomes a stable currency, then the value as an investment is completely gone. So good news. You still have an opportunity to invest in Bitcoin as a value increasing asset. And eventually, someday, it will stabilize. And then you will have a stable stable means of saving your value. I hope that made sense. It was a little bit rambly, but you take my meaning. I have often thought this, independent of ever seeing this meme, Bitcoin is the lifeboat. The flood is coming, and Bitcoin is one of the few things that you can rely on there. I'm not going to play this clip for you, but from @documentingbtc, a clip of Buckminster Fuller predicting Bitcoin in the year 1967. In this clip, Buckminster Fuller, the great scientist and engineer, talks about how our conception of money is going to change. What is money, really, according to Buckminster Fuller? Well, it's energy, it turns out. It's a means of storing energy, which is an interesting conception because how do you get Bitcoin? How is Bitcoin created? With the mining process. What do you have to put into the mining process? Energy. You can't counterfeit it. You can't fake it. You can't manipulate it. Energy exists throughout the universe. Everybody has theoretical access to it, whether it's solar or hydro or whatever it may be. Anybody can tap into energy at any time. And if they integrate with this protocol, the Bitcoin network, they can participate. So there are several people who have more or less predicted Bitcoin or its various pieces over the years, some of them decades ago. Buckminster Fuller is one of them. The economist Milton Friedman was another. He talked about peer-to-peer electronic cash in like the 80s, saying that we would need that for true free markets to emerge globally. Another one, I think, is Ron Paul. I should do a whole video on this at some point, the people who predicted Bitcoin well before it was invented. Alex Gladstein, one that I always like, the president or director, chief strategy officer, I always forget his title, of the Human Rights Foundation, fighting for people to get out of authoritarian regimes around the world. He says, I always liked the word disestablishmentarianism as a kid. Why do kids learn that word? Because it has a lot of syllables, and it's fun to say. Disestablishmentarianism. I'm almost certain I heard my nephew tell me that word once when he was a kid because he learned it because it was fun to say. Gladstein continues, I just realized Bitcoin is monetary disestablishmentarianism. Pretty neat. Fun word. From Mike Alfred, if your biggest asset is your house and you own no Bitcoin, you will almost certainly be significantly poorer in 3 years compared to someone whose biggest asset is Bitcoin and doesn't own a home. There's a lot of speculation going on right now that real estate may experience a catastrophic crash in the not distant future. We already talked about the Chinese economy and how that's going to collapse. Well, China's on the other side of the world. Why would that impact my house price? Because it turns out the Chinese own a lot of real estate in the United States, especially in major cities. So if the Chinese market collapses, it's going to have an impact here. And in fact, your home value may go down. If you're living in that house for a very long time as a primary residence and you don't plan on selling, it doesn't really impact you. But if you're investing in a house as a primary investment, and that's the reason that you own it, you're going to see your net worth drop. Bitcoin, on the other hand, over any 3-year period, goes up. I don't think historically there has been a 3-year period where it ends lower than it was 3 years prior. So I do both. I own a home and I have Bitcoin. I own a home, frankly, because my wife really wants to own a home. And, that's how we do it in America. I'm not actually a huge proponent of home ownership as a fundamental thing that everybody should do. That's kind of the American dream. I don't necessarily think that's the way for everybody to go, but c'est la vie, topic for another day. From Bitcoin Archive, just in, 16% of US adults have owned Bitcoin or crypto, Pew survey. Now, let's read between the lines there. They're saying Bitcoin or crypto. Okay, let's assume half of these people owned Bitcoin. It's also written in the past tense, right? So we go from 16 to maybe 8% that actually own Bitcoin rather than some other cryptocurrency. And it's also in the past tense. So do they own it now? Let's cut it in half again. So what we're really talking about there, it's not 16% of US adults owning Bitcoin right now. It's more like 4%. Again, I'll say this a million times because it's always true. You're still early. You're early to Bitcoin like people in the early 2000s were early to the internet. It's not over yet, friends. We're just getting started. Also from Bitcoin Archive, breaking, Bitcoin is a leading indicator and may be a maturing global collateral. From Bloomberg Intelligence, well, we already knew that. It's interesting when these major institutions start to get on board and to speak positively. It sounds really great, but like they don't move with a unilateral decision like, oh, Bitcoin looks like it's maturing. Maybe we'll get on board. It's slow movement. So even when somebody like Bloomberg Intelligence is saying it's maturing toward global collateral, that's a good indicator. It's not the end all be all. I will close with this tweet from Coin Corner MSW, not an account I'm previously familiar with, but somebody who is asking about who to follow. Can anyone shill me a list of essential Bitcoin Twitter follows, maybe 50 to 100, asking for a newcomer looking to get plugged in to some signal? Here's my response. Who should you follow on Bitcoin Twitter? Well, interestingly enough, it's not really the maximalists, right? The raving, laserized maximalists. Why? Because if that's all you're listening to, then you're just going to get what we talked about earlier. It's all bullish all the time. Oh, price is going to go up. We're all going to get rich. Have fun staying poor. You need context. You need people who are looking at other things, including the broader macroeconomic situation. Because at this point, if you're saying that the macroeconomic situation does not have immediate impact on Bitcoin, you're deluding yourself. That has become abundantly clear over the last 2 years. Bitcoin exists because of the broader macroeconomic situation. Satoshi was responding directly to the 2008 collapse. That's why it was invented. So you have to pay attention to it in that context. So who am I recommending? Well, the great Balaji Srinivasan, of course, he's the first on my list. Balaji is by no means a Bitcoin maximalist, but he is a Bitcoin, mostimalist. He's also very thoroughly into Ethereum, and I think there are good reasons for that. I'm not into that. I would disagree with that, but Balaji recommended it on the Tim Ferriss podcast not that long ago. The previously mentioned Dylan LeClaire, a writer for Bitcoin Magazine, a fantastic analyst, and who gets accused of being too bearish on Bitcoin all the time. I think Dylan is a realist who sees the long-term value of the network, but isn't always going to tell you that the price is going up tomorrow. Why should he? It hasn't for most of the last year. Lynn Alden, another brilliant analyst who is definitely looking at the broader macroeconomic situation. Everybody listens to Lynn. Really, truly. Everybody listens to Lynn because she is so insightful on the broader situation and the historical similarities to other times. She's somebody to pay attention to. I added Daniel Batten because he's an environmental investor, and he's one of the few people who really focuses on Bitcoin, the Bitcoin network as a net positive for the global grid and the environment. This is something that I believe is A, true, and B, an important narrative that we need to be advancing if people are going to understand that Bitcoin is good for the world and is not boiling the ocean. The boiling the ocean narrative is a superficial, easy thing to say that is demonstrably untrue, but it is going to be the attack vector that people continue to come after Bitcoin on. Count on it, trust my words. Daniel Batten is one of the best thought leaders in this area to counter that false, superficial narrative. I also added Kevin Rook. If you're interested in a Lightning Network, I think you absolutely should be. Kevin Rook is a great guy to follow. He's all about Lightning. He's all in. It's what he talks about. The Lightning Network is where the next evolution of Bitcoin is happening. The base layer, layer one, it's fairly well established. I don't think we're going to see any more dramatic changes on layer one. But if we want to continue to expand adoption, to increase bandwidth, to find even new use cases, that's going to happen on L2s. Which L2 am I most excited about? The Lightning Network. All right, team, that's what I got. Hope you're doing well. Did I tell you that I didn't do some live streams last week because I've been sick? I'm on an antibiotic right now, so hopefully getting better soon. And hopefully we'll continue to do these every day. I don't like missing days. I missed several days last week. I'm not going to do it anymore. All right. Let me know down in the comments if you would like to talk about any given topic in the future. We got a couple comments right now from Gabe. He says, what did they say? Are the people that refinance their student loans screwed? They haven't really said anything yet. There's a lot of speculation that President Biden is going to issue up to $10,000 loan forgiveness soon, but it's all rumor at this point. Not unfounded rumor. I think there's validity to it, but we got to wait and find out what they're actually going to say. And then Ian Rand McKenzie, as always, checking in. Hello, Ian. Thank you for watching. All right, team.